Lido platform has reached 1 million validators amidst a drop in total value locked, TVL. To operate a node on Ethereum and participate in ETH staking, a minimum of 32 ETH is required. However, Lido makes this process more accessible to a broader audience by allowing smaller contributions. Lido Finance is a major player in the decentralized finance (DeFi) sector. This platform enables retail clients to engage in staking with less than 32 ETH. Recently, developers announced that the Liquid staking protocol has become the largest on Ethereum. According to Dune Analytics, currently, over 27.16% of all Ethereum volume is staked, predominantly through platforms like Lido, largely due to the advantages of Liquid staking protocols. Unlike traditional staking, where assets remain locked, users receive Lido-staked ETH, SETH, tokens in return, which can be utilized in other DeFi protocols, enhancing liquidity. With Lido, staking can be conducted without locking large amounts of capital. Currently, the platform accounts for 28.5% of Ethereum staking. In comparison, the similar metric for Coinbase is 13.6%. However, the total value of assets locked in the protocol, TVL, has decreased by about 25% from a peak of $40.16 billion in mid-March to $29.78 billion. This reduction reflects a broader trend in the DeFi sector, where the total value of locked assets has decreased from $97 billion, a peak reached in April 2024, to $92.22 billion. Despite the downturn, the sector continues to grow, primarily due to the adoption of Liquid staking and restaking protocols such as EigenLayer. Meanwhile, the recent decrease in Lido's TVL raises questions about the long-term sustainability of rapid DeFi growth. In 2022, Forbes compared DeFi staking mechanisms to Ponzi schemes, highlighting their dependence on a continuous influx of new investments to maintain value. Crypto fund outflows continue for third consecutive week. Last week saw a significant outflow from cryptocurrency-based investment products, totaling $435 million. This marks the third consecutive week of outflows, reaching a peak since March of this year, according to a weekly report by CoinShares. Trading volumes for ETPs/ETFs remained low, dropping to $11.8 billion from $18 billion the previous week, amidst a significant decline in the value of Bitcoin, which fell by 6%. In terms of regional activity, the largest outflows were observed in the United States, amounting to $388 million. Despite this, the total inflow into American crypto funds over the last year still stands at a record $13.6 billion. Other countries also saw a slowdown in inflows. Funds in Germany and Canada reported outflows of $16 million and $32 million, respectively. However, Switzerland and Brazil broke the negative trend, with inflows of $5 million and $4 million, respectively. The majority of the negative inflow was attributed to Grayscale, the issuer of a spot Bitcoin ETF, which saw outflows of $440 million, marking the lowest level in the last 9 weeks. Over the past 7 days, the inflow was only $126 million, compared to $254 million previously. The negative trend was concentrated exclusively on Bitcoin and Ethereum, ETH, with outflows from products based on these two cryptocurrencies amounting to $432 million and $38 million, respectively. On the broader altcoin market, sentiments were more positive. Investors increasingly opted for investment products targeting multiple assets. USDC overtakes USDT to become the market leader in transaction volume. USD Coin, USDC, developed by Circle, has surpassed its biggest competitor, Tether, UST, in transaction volume this year, becoming the market leader. This is according to data from payment giant Visa, compiled in collaboration with blockchain analytics platform Allium Labs. Visa's metrics indicate that last week, USDC transactions amounted to $455.51 billion, while USDT's figure barely crossed $88.5 billion. Since the start of 2024, USDC has accounted for about 50% of the total transaction volume in the stablecoin market. Previously, the largest stablecoin by market capitalization, USDT, consistently held the leading position. Even now, according to DeFi Tether's share is estimated at 69%. However, USDC's figures suggest a possible shift in user sentiment. Cryptocurrency analyst Noel Acheson believes the change in dynamics could be due to the following. USDT is more commonly used outside the US as a dollar store of value, while USDC is utilized within the states for regular transactions. Stablecoins are tied to the value of fiat currencies, in the case of USDC and USDT, to the US dollar. These assets play a crucial role in facilitating coin transfers within the cryptocurrency ecosystem. However, transaction data available on public blockchains may not be entirely accurate. According to QE Sheffield from Visa, digital operations can vary, initiated by users themselves or by specialized bots. For instance, if transactions related to bots are excluded from the statistics, the total volume of transfers over the last 30 days would drop from $2.65 trillion to $265 billion. Recently, Circle has been actively developing USDC, especially after a challenging period associated with last year's banking crisis in the US. At that time, amidst the bankruptcy of Silicon Valley Bank, where the issuer held over $3.3 billion, the stablecoin's market capitalization plummeted from $56 billion to $23 billion, and the coin briefly lost its peg to the dollar. As of now, USDC's market value has recovered, though not to its peak levels. According to CoinGecko, the asset's capitalization is $33.4 billion. Last week, it was revealed that Stripe, a leader in online payments, is resuming cryptocurrency transfers. The platform began accepting USDC on 3 networks: Solana, Ethereum, and Polygon. Additionally, issuer Circle has also partnered with BlackRock, the largest asset manager, which launched its first tokenized fund at the end of March. Through the collaboration between the companies, clients of this fund can now convert BUSD to USDC on the secondary market.